Hello traders, welcome to another trading interview, this time with one of our series FTMO traders, Joshua from Perth in Australia. Welcome Joshua.
Hey Peter, thanks for having me.
Well, we are so thankful to having you on today. And guys, for those who are listening us for the first time, FTMO is a serious company that actively search for trading talents because we have developed a unique two-step evaluation process that consists of FTMO challenge and verification phase. And once you pass this two-step evaluation process, you will be offered a unique placement in our proprietary trading company. And that is why we have Joshua here, because Joshua is a really good trader. He right now has two FTMO accounts, one with $200,000 and second one with $250,000 because this account was scaled up. So right now he manages $450,000. That's almost $500,000. Amazing. So this is really great. Congratulations, man. And your profit from previous month of $33,000 is point, it's period. It's amazing. Thank you so much for having you on, and I'm so really looking forward to hear your story and your strategy. But before that, please, come on, man. Introduce yourself to us, please.
Thanks, mate. Yes, I'm from Oz. I currently live in the UK. I've been here for about 5 years now. And I got into trading like right back when I was about 18 and then took a bit of a hiatus. I went into tech. I had a bit of a tech company, gave that a go, and then got back into trading in about 2018 and started learning a couple different strategies, which we can get into a little bit more when we do the trading part of it. And then I guess over the first 2 years of that period was mainly just like really learning it, diving into it, back testing, forecasting, reading loads and loads of books, all the mindset stuff that you kind of have to embed into your mind in order to get to that point. Where you can kind of break through that threshold into consistency. And then really in the last year, or since March last year is when I started to really nail it down into a particular strategy that I trade now exclusively. And that's when I started getting into FTMO, trying to do these challenges. And then obviously like this year's been much better where I've really hit consistency and got funded with you guys and then started to build up in other areas as well.
So do you think it is more important, the consistency part, that you need to be consistent, or it is about your strategy?
Well, I think your strategy, you need to back your strategy initially, right? And you need to be able to back test your strategy to prove to yourself that it actually has a quantifiable edge that is profitable, right? Once you see that in your back testing and you can adequately identify your edge in the market when you see it, you will then have confidence that when it appears in the live market, you can take the position without being too scared to potentially enter. And then from that, you will then build consistency over time. You know, so like if I think about my first month when I was trading this as a funded account, the profit wasn't very large. Like everything was actually really tiny. And then from that, every single month it's built more and more and more and more and more. And then I got more funded. I've done other prop firms. I've passed them. So I think once you start proving to yourself the consistency or rather the profitability of your strategy, right, then you will become more and more consistent because you can identify in the market when setups are maybe shitter than others and you really shouldn't take them. And then you just have more confidence in yourself as a trader. You have more confidence in the strategy itself as well.
Kind of very interesting understandings. And tell me, how long did you take to know this?
Well, so I've done 22 challenges with FTMO, right? I know there's loads of traders out there that have like done it once, smashed it. That just wasn't my journey at all. I got close loads of times. I mean, your guys' risk parameters and your trading objectives are so like rigid. Like you will not bend. You know, it doesn't matter if you're almost there one day before. You're like, nah. You know, and if you're $1 less than the profit target, you're like, nah, which is really frustrating when you're trying to pass it, right? Because you get super close and making 10% in a month is an annualized return of 120% uncompounded, which is huge. You know, if there's, you know, to be able to generate that sort of profit is massive. So and you only really have 22 trading days in a month. Like you say you got a month, but you've only really got, you know, obviously the weekly. For me, when I trade FX, I don't trade crypto. So it took a long time to sort of get to that point. And although I did 22 challenges, I only failed 3 times.
So you got free repeats, right?
I got loads and loads of free repeats, like just constantly getting free repeats. The one time that I failed on those 3 accounts, I linked them all together. And so it was one fail, but it was a fail across 3 accounts. And I think I did that, A, because I saw loads of people around me that I knew, other traders that were like passing quickly. And my ego was like, fuck this, I just want to pass. I'm sick of doing these challenges. I want to earn some money. And then I just kind of realized like I wasn't ready for that. It was too much. It was too much too quickly. I wasn't ready for it. This was when you guys had only 300K as your max allowance. So I did 3 100Ks at once. And then there was like a time in December last year where I'd passed the challenge, and then I got into the verification and I just bottled it. Like it just got to me, and I remember I didn't pass the verification. I got so close. I think I got to like 4.7% running. And I don't know, something, I had a mental snap and it just didn't work.
Wow.
And so at the end of last year, you know, if I looked at myself objectively, I was like, well, I was making profit every single month. I just wasn't hitting this 10% profit target. So my own personal account was growing nicely. That was all fine, but I didn't have, you know, 400K in my personal account. So in terms of like my income, it wasn't enough to rely on that. And so it just became like this whole mental process of accepting that it might take longer than I wanted it to. And that, you know, as much as I wanted FTMO to perhaps see that I was making profit every single month and that I was going to be a profitable trader and just like, come on, cut me some slack, this is doing my head in, I realized you guys aren't going to bend any rules at all, which is like infuriating, but you know, it is what it is. And so for me, it just kind of came back, all right, I've got to get back to the process of, if my setup's there in the market, I just take my setup. And then also realizing that there is a bit of a game to play with passing the challenge. Like, for example, I don't trade the challenge like I trade my live account. And my live account, I follow my rules exclusively, right? I just absolutely follow my rules because it's the one thing I can cling to. I've back tested it. I know them. I trust them. But when you're trading the challenge, you know, you have to make 10% in 22 days. So if I'm running a profit that's really, really strong, let's say I'm running 6% and I'm a week in, I will probably close the position manually and say, all right, I'm going to see that, okay, I've got another 3 weeks now to try and pull 4%. And then when I started really to do that, you know, I had profit targets in my positions that when they hit that certain peak, I was immediately taken out of the position and the account hit the 10% and then it was done. And so for me, it took me a long while in 2020 to get to the point where I realized I kind of had to trade the challenge a little bit differently than how I really wanted to. And because I was learning the strategy, I wanted to trade the strategy in its purest form. And whilst that was great and it was still providing me profitable months and it was really good, I just wasn't good enough at the strategy to be able to consistently pull 10% per month while trading it purely, right? I had to kind of manipulate a little bit to pass it. And I think, you know, as I get better, I will be able to, you know, rid out some of the errors some of the trading errors that I still do, you know, and get to the point where I can trade it really, really, really well. But, you know, certainly trying to pass the challenge, it was really hard. And so that's kind of over the last year, how I've become more consistent is understanding that. And then once I passed it, the pressure was off big time. You know, I know that there's a lot of traders that when they pass the challenge, they actually give it back really, really quickly. And I had a couple sessions with the trading psychologist Celeste, and that was actually really useful. And we did a couple exercises that I found really, really useful. And she was saying, you know, it's quite common that once people pass, they actually give it back because they put the challenge on this pedestal, right? That's like, oh, I have to pass this challenge. Once I pass the challenge, I'm going to be earning all this money. And then they get access to the account. They start increasing their risk. They take too many trades. They overtrade. You know, and I think that's a reason why you guys actually, I think when you pass, you send an email saying, just chill. Like, you've passed it now. It's not a race, right? It's not a sprint. It's a marathon here. Just take your time. And so once I passed, I was like, all right, I don't have to make 10% anymore. I saw it as a plus. I can make 3-4% a month, 5% a month or whatever, and I'll still be wildly successful. You know, hedge funds will be biting my arm off to get involved with me if I'm making that sort of profit. And if I happen to make 10% a month, well, that's amazing. Great. I'm pumped about that. That's amazing. I'm pumped about that. And yes, I'll be able to scale more and more and more. And actually the month that I did the 33K on the 250 or the 200 account, no, the 250 account, I hadn't passed the other one at that point. So I only had the 250, and that turned out to be like a 13.3% month. So like, fantastic, but I'm not banking on every single month to be like that. I'd like to get to the point that it is, for sure, but I'm not putting the pressure on now that I've passed, that I have to be hitting that. You know, so that was one of the benefits, and also what allowed me to be more consistent once I passed the challenge, is I felt the pressure had actually come off a lot because the time limit had buggered off and I didn't have to hit these profit targets.
It is so nice to hear how honest you are to yourself, because when you are honest to yourself, you can learn from your mistakes and you know what to do. So my question is right now, I would like to know more about your emotions when you were failing the challenges, because you said that you failed 22 challenges. How hard was that? Or
I mean, I was absolutely snapping. Yeah, I mean, I was screaming you guys into oblivion, saying FTMO, fuck these guys. Yeah, it was so painful because I mean there was one instance that I had on my second 200K account that I recently passed. So I passed that account in July, August. I passed that one, and on the previous turn before that, I was in this Aussie dollar position. I had scaled into it. So I was in 2 Aussie dollar short positions, and it was just a thing of beauty, right? It was running in my favor. So lovely. It was a Friday evening. And because I was in the challenge, I didn't have to close. I had to close on my other account because it wasn't a swing account at that point. And so I closed on my other one. That was fine. I was in it on the challenge, and I thought, this is so great. The market was like 20 or 6 pips away from my stop loss on the open. So I was like, I've got enough buffer there. I should be fine. And I got killed on the open within I think it was at 10:52 p.m. on a Sunday night. Over a 4-second period, the LMAX spreads increased to 20.6 pips spread on the AU, and I got taken out over a 4-second period. The trade then went on to make me 15.4%. So
you got the stop loss, right? You were prepared. You were prepared.
I was prepared, and I felt like I had an adequate buffer. It's AU. You know, I've observed that your normal spreads on AU are around 0.3. So to go to 20.6 was 69 times the normal spread. So to say that I was angry is like the biggest understatement in the world. I was absolutely ropeable about this, which I made your customer service reps very, very, very clear about. And so that took me, you know, I was so pissed because it was like there was 2 days left before the thing exploded. I had traded just so well. It was such a great trade. I followed my plan perfectly. To add insult to injury, I had my other trade copiers set up, and the FTMO challenge was my master account. So as it took me out on the master account, it took me out everywhere else as well, even though the spreads in my other accounts were not the same. So it was like, when it rains, it pours, right? It just was like someone had just stepped on my head. And so that took me about 2 weeks to really like calm down about. It was just because I was in this point where I was so close. I felt it was so unfair. It was one of those things where it kind of is what it is. And it sent me down this rabbit hole that just wasn't helpful. Right? It wasn't helping my trading. It affected me on my other accounts, my other prop firm. I got picked up by this hedge fund like earlier on in the year as well. It affected me on that account. Overall, it just really affected me. So for me, over the 22 challenges, that was the most painful. And also because my ego at this point was like, well, I already have a 250K account. So I was saying to you guys, like, you know, I'm so close. You've done me by, you know, a 4-second spread hike, and like I've proven myself consistently profitable. I'm already scaled on the other account. Like, just let me pass. This is crazy. And of course, like, you know, you didn't. And so I kind of had a decision: either I don't do another challenge, I say, screw you, I'm just going to have this one account and I'll build that account up, or I come back and I just keep doing the process, because if I'm going to trade that account, my profitable account, well, then I might as well just keep doing the challenge, right? If I pass it, I pass it. If I don't, I don't. And so once I accepted that and I went into the next one, like it took me, I really needed to calm down. But then I went into the next one. I was like, look, when I pass it, I back myself to pass it. I love my strategy. I trade my strategy well. Eventually I'll pass this thing. And then I passed it on the next one, which was great. And then I passed the verification in like 2 days. And then I had to spend like the next, I think it was like next 8 days, just sort of doing micro trades just to get over the 10-day verification trading day thing. So all in all, it was good. But yeah, I mean, over 22 challenges, man, there were some really, really frustrating periods for sure. Because you're telling yourself that you're better, and you can pass this, and you should be able to pass it, and then you get on yourself like, I'm better than this, and it's like, it's not about that, right? It's not about whether you think you're better than it or not. As long as you're trading your strategy consistently and you're following your rules, the market will either allow you to pass it or it won't. Like, that's the reality. So
you are trying to beat the market, but you are the market, man.
Exactly, right? I don't have like $1 trillion account. I can't move it in my direction. I'm a screen-based trader.
Yep.
If my setup's there, I take it. If it works, it works. If it doesn't, it doesn't. And so I had to like go right back into watching a lot of Mark Douglas stuff about like trading psychology, and really just calm the fuck down, really.
Well, but you know why we have the trading objective that strict, right?
You tell me.
Well, because it's fair. Everyone has the same opportunity. Everyone. And they can try it million times on the free trial, and if they are ready, they can buy the FTMO challenge, and the rules are same, fair to everyone.
Yeah, I mean,
no
it's
exceptions,
true.
no exceptions. Like anyone on this world, like more than 180 countries we probably have right now in our portfolio, well, all of them have same rules.
Yeah, that's true. Yeah, there was yeah, look, it is, I guess you're right, it is strict, but it's fair. I just felt when there was those like spread inconsistencies like that, you're like, it just feels like you're being traded against. It's like having a broker B bookie, right? And you're like, these guys are taking the other side of my trades. That's how it felt. Anyway.
Well, that's not how it is, I'm sure, but you know, sometimes that's data. I don't know your example or what exactly happened there, but like you said, you got a stop loss there, and you were prepared for some of this can happen, right?
I was definitely prepared for some slippage. 20.6 pips is excessive slippage, but anyway, I passed.
Great to hear. And right now you are manager of almost $500,000. So, oh my.
Yeah.
Come on, man. Please, can you show me your strategy?
Yeah, sure. Share the screen now.
Yes.
Okay, so the strategy that I trade is called Gorilla. It was made by, it was a trading community that's based in the UK, but they've got traders everywhere. Started by a guy called Josh Bunker, and I was using a strategy before that called Falcon for like the first 2 years, which was really, really interesting strategy. Taught me a lot about market structure, how to identify, where market's likely to go in a higher time frame down to a lower time frame. And the tutelage around that was brilliant. For me personally, it didn't help as much on the entry criteria and the stop loss management. There was a lot of discretion around entries, which for me personally, I feel like I need something a little bit more mechanical, or I can start to get into this element of second guessing. You know, one day I wake up, I might feel a little bit more confident and aggressive. Other days I feel maybe a little bit tired and not as aggressive. And so my entries could differ, where I like to have something that's a little bit more mechanical and say, this is your entry, it's there right now, take the trade, you've back tested this. It's a lot for me more simple. So the Gorilla strategy is the way I understand it, the way that I trade it, is typically around trying to identify existing momentum in the market, or when momentum is likely to move. But it's always based around trading once things have happened, not trying to call before it happens. I had a trading mentor a while back that said, like, people that try to pick the bottom, traders that pick the bottom end up with smelly fingers, right? So it's like, it's one of those things where if you're trying to call the market before it does it, yeah, you might be right at some point, but you'll burn a lot of percentage in trying to call that, because the market can go a lot lower than you think it can, and it can go a lot higher than you think it can as well. And so the reason I really resonated with Gorilla is that if you saw ascending channels or ascending price action where it was really slowing down as it was kind of creeping and exhausting, like gasping for air as it gets there, if the market then turns, right, you've actually seen the market has reversed, and then you're looking to set your entry. You're not trying to call it before it does that. Yeah. And for me, you know, calling the market before it actually does something, you know, I ended up burning a lot of percentage doing that in the old strategy, where this one, as it actually changes and that you can see the momentum shift in the market, I'm then setting my order, right? So I'm actually, the market's showing me, you know, what's more probabilistic of what it's likely to do, and therefore I'm making decisions based on that. So that, in a nutshell, is how I see Gorilla and my interpretation of it. So the trade that I have on the screen now is called, in the actual setup is called a continuation bullet, the way that I trade. And so this is a trade that I took in my last account metrics that did the 13.3% on the month, which is the 33K you're talking about. And so this is one of the trades. This is an Aussie dollar position where effectively there's existing momentum in the market. Market's moving high. It's, you know, it's got gas behind it. So I like what I'm seeing. There's a little bit of you can see my cursor, right, Peter?
I can.
Yeah. Okay, cool. So there's a little bit of like range bound activity here where the market's kind of slowing down. It's like, it's not particularly maybe sure what it wants to do. But after that happens, it then starts to move higher. So at this point, I've got a 2 candle break above what this was the previous high here. And then the market started to move higher. So at this point, I was ready to set my order because I'd seen this existing momentum, price moving up. Everything's trending in a nice way. I wasn't particularly concerned about this because what had happened is that the market then showed me that it wants to move higher. So, and that's one of the things I really like about strategy is it kind of, you know, you wait to see what the market's going to do and then you make your decision from that, not trying to predict what it will do. So you can also see that I don't use any indicators at all. There's no RSI, there's no MACD, there's no stochastics, there's nothing. It's just pure price action on a 1 hour candle, 1 hour time frame. And I only trade 4 pairs, right? So these are the 4 pairs that I trade. I know people in the strategy trade a lot more, but for me personally, I only trade Aussie yen, Euro yen, Aussie dollar, and Euro dollar. And so, and before I show you what the trade did, the reason why I do that for me is, you know, Josh Bunker talks a lot about understanding pair characteristics, and you know he's been trading 10 years, right? So he's had a lot more time to go through the pair characteristics of all those different currency pairs that he trades. As I've really only been exclusively trading this strategy since March last year, I didn't want to dive too heavily into trying to take on more pairs because at some point you will take a loss, right, on probably every single one of those pairs. You don't know the sequence that's going to happen. If you're trading 10 pairs, at one point you might take a loss on all 10 pairs in the same sequence, right? And so you could have a drawdown of 10% if you're risking 1% per position, which I do. So for me, I wanted to be able to just focus on 4 pairs that I felt really gave me enough opportunity in the market per week or per month or per quarter that I could generate a nice steady profit stream without probabilities potentially affecting my mindset too much if I experienced a sequence of losses on multiple pairs at once, right? And so my win rate, which you'll see in the next section when I show the account metrics, is typically always around 30 to 40%, right? With break evens thrown in, maybe it hits 42, 45%, but it's, you know, I lose more than I win. But because my risk is always capped at 1%, I always know that my loss is only going to be 1%. And because of the strategy, there's a way when particular things happen that you can reduce your risk down to 0.5 or 0.2 or 0.1. So sometimes losses are very negligible, right? Where you could have a string of losses of 0.2%, right? And you can lose 5 in a row and you actually only lost 1%. And so if you have a win of 2.5%, you're well in profit, but your strike rate or your win rate is particularly low. And that's one of the things I really liked about the strategy is that the strike rate wasn't as important. You know, it wasn't necessarily always critical that you won the trade. It was, if the setup's there, take the position, because the profit will outweigh the loss over a series of trades. And anyone that's listened to Mark Douglas will know that what I'm talking about sounds a lot like him, but that's because I just think he's brilliant. So, so in this trade, I set the order. Do you want me to run through it?
Yes, run it.
Yeah, sure. So, okay. So I was tagged into this position, as you can see. So in this strategy, we look at this saying, okay, this is called the continuation bullet. So this is called the bullet line, right? This little dotted line. And that's basically saying that if price is going to continue moving with the momentum that is currently showing, that will likely be the bottom of the range. And that price will probably hit that area and move higher, or it won't go lower than that. Obviously, it can do whatever the hell it wants, but this is the strategy. So I would then move, okay, that's now my high. I'm in profit, you can see, but my risk is still a full 1%. I haven't been able to manage my stop loss yet. So price then does its thing. I think here, yeah, we're moving into spread hours, which, you know, in the UK is between, you know, 10 and 11 p.m. at night, where you got swaps. So on Aussie dollar, you know, the spread should say relatively low. So I felt like I had enough gap. I had, you know, basically 20 pips. I had a 15 pip stop on this. So I've got about, you know, 20 pips until the low. So I felt like I was more than covered. And then price trickled around a little bit. And then, all right, so now price breaks the high. It's moving in my favor. I now move my stop loss
to break even, right?
I get to lock in now. So this now becomes the high, right? This is the most recent high. This little thing here is called an inside bar, which means that the high and the low of this candle fits into the previous candle. Okay. So in the strategy, this now becomes the most recent low if we go back in price, because this high is higher than this high, but this high is lower than this high. Right, so this becomes the most recent low. Okay, and then I put my stop loss. Put my stop loss 2 pips below that low, which is going to be 74.015. So it's going to be 73.995. I'll just make that. Oh, sorry. And then I've now locked in profit to this point. Okay, because I can see I'm running, what am I running? 1.91% there, right? You can see that. It's a risk reward ratio 1.91, but I'm risking 1%, so it is 1.91%. And then, but I've actually locked in about, you know, 0.34, right? So at this point, anything can happen. If it just rips around, takes me out, it's okay. I've locked in some profit. It is what it is. I just let the market do its thing, and hopefully it's going to keep trending, which it looks like it wants to, because the candles that are breaking the highs are very strong, right? So price keeps moving higher. There's nothing for me to do at this point. I'm just running good profit. Price keeps moving higher. It's a lovely day at work. Okay, and then price breaks the high again, right? You can see that. How it broke. I know it is quite nuanced, but you've got to just be always, you know, I have alerts on when it breaks the high. So I'm always, you know, my computer starts to shake and rattle when it does things. And so at this point here, I then, like before, I put it 2 pips below the low. So that goes to 27.9. Which goes up to here. So at this point, I've locked in 2.17%, and I'm just letting the trade run. Okay, there's no potential for me to scale in just yet. A scale in for me is I only scale in once I have risk off the table. So if I'm either at break even or a locked in profit, and then I have another setup where I would get into the trade if I wasn't already in the previous setup. Right? So it's like I literally sit down, I see the market, I like what I see, and then I'm looking for another position. So this was, I think this was on a Friday at 1 o'clock. So this was NFP, I think, came out. Maybe it wasn't. Yeah, it was NFP. And this is also the last day of my profit split. So I had to close this day. So this is quite an interesting situation because I normally would let the trade play out, but because I had to close that night because I had the profit split ending on my reference period, I waited for the candle to close and then I manually exited the position, right? On my other accounts, I let it play out because that's the strategy. So in this situation, I just closed it after the hour closed on what happened. So I end up taking 4.21% on this position, and then price opened on a Monday and it did its thing, and then it kind of played out. And I think eventually price came back down and it took me out just there. And so on my other accounts, I made the 2.4. On the FTMO account, I made 4.21. In this particular situation, because it happened to be the profit split day, if it wasn't the profit split day, I just would have left it play out, but you guys were going to close the position that night anyway. So I thought I may as well just take it and close it then. And so that's an example of how I trade it.
And why are you scaling up the position? Why are you not closing and opening a new one?
Well, because if I close a position manually, I'm basically saying, you know, this is the most I'm going to get out of this position today, and I'm going to close that, and I'm going to look for a new position. But because I have my stop loss trailed so closely underneath the 1 hour trend, if price is going to turn around, it's going to take me out, right? So that's fine, and I've locked in, you know, a lot of the move at this point. So I'm kind of happy to say, okay, if I can get into another position here and I can scale in, well, then from that point onwards, I'm making 2 times as much on every single pip the market moves in my favor. So my original position can still be running amazing profit, and I'm in a second position now. And so whatever happens with the second position, because I'm already at break even on my first position, or I've locked in profit on my first position, the worst that can happen is that I lose 1%. And that's always the worst that can happen anyway, because I'm risking 1% per position anyway. So if I'm already in a trade that's running good profit and I see the ability to scale in, then I'm only putting 1% risk back on the table for the chance that price is going to keep moving in my favor because I like the setup of why getting in, and then I'm making twice as much per pip that the market moves in my favor from that point onwards. And, you know, there's been trades that I've taken earlier in the year and in my back testing where, you know, if I just taken one trade in a trend, maybe I make 10%, right? But because, you know, it's a good trend, but there's other times where I've taken 2 or 3 scale-ins within that, and that 10% position has turned out to be like a 23% position because of the scale-ins have offered so much more, because the price is still moving down, but I'm taking 2 to 3 times as much per pip in my direction. And that's actually what happened on that trade I was talking about earlier with the Aussie dollar trade, with the short, because I was in two scaling. I was in the original position and a scaling, and prices kept moving down. So that's how I generated the 15.4, because it was really only I think 10% on one of the positions and 5.4% on the other. Where if I didn't scale in, well, then I wouldn't have the opportunity to make that 5.4%, which is a huge return.
And can you tell me more about how did you backtest this strategy?
Yeah, so the way I do it is effectively how I'm doing it now, right? So I would click this button and I would go to, let's say, the 1st of January 2019 or 20 or 21 or 18, whichever year that I wanted to do, and I would stick to one particular pair. I would have my most recent high, my most recent low, and my bullet line hanging around for when I need it. And I literally just go candle by candle for for every month, like this, until I see my setup. I see my setup and I go, okay, yeah, that's fine. Let's say I was going to get in here. I wouldn't, there's no setup. I put my order, I take a screenshot of the trade, and then I have my back testing journal. I put everything in there, and then that summarizes all my returns for that pair per month, per quarter, and for the year. So I can then identify, all right, you know, Aussie dollar generates really, really good returns on these days at these times. But at these times on certain days, there just isn't the volatility in the market, right? The investors aren't there. There's no one trading it. And so the probability that those trades work is a lot less. And that's something that I've really refined. And I have a lot of rules around when I will trade particular pairs and particular setups. For example, euro dollar, between midnight and 3 a.m., my back testing showed me that there really is a massive lack of liquidity in the euro dollar during those times. And so if I'm in a position, it's likely that price will just trickle and could easily take me out and hit my stop loss. But after 3 a.m., I then have the opportunity that the market, London's going to open at 7 a.m. And so there's going to be a huge spike of volatility that's going to come. And from that 3 a.m. to that 7 a.m. period, it's then okay to take what I would deem valid setups, not just high probability. Right. And so you have to know all my plan to understand what I consider high probability and valid. But it's things like that in my back testing that have shown, okay, you lost 90% of all the valid positions that you took on euro dollar between midnight and 3 a.m. And so just by removing that, okay, there was 9 trades there and there was an 8% drawdown. So now I can basically remove that and say, okay, when that happens, I don't need to take it because I've shown in my back testing that's not a profitable time to be taking valid positions on euro dollar.
And
so, yeah.
And how often do you look to your journal?
Quite a lot, to be honest. I mean, I'm always sort of, my journal, I'm always reviewing. I back test a lot. I probably need to back test a bit more not because I don't understand the strategy, because it actually just gets me into quite a nice feel for the market. And there are times where I still you want to be in the market, right? There's that feeling where you're like, oh, if I'm not in the market, then maybe I'm not making money. And that's I feel like it's quite an amateur way to think, because not having a position in the market is actually having a position, because you're saving, you're in capital preservation. And so by back testing and looking at my journal, it kind of gets me into seeing the market, taking the positions, learning from certain price action, and really being able to identify and hone the skill and look at potentially past errors that I've made of where I got into a trade mainly out of FOMO. I thought there was momentum, but maybe there really wasn't. And I took the position thinking there was momentum because I really wanted to be in the market instead. So I look at the journal and I do like an advanced self-review where I look at past trades and I look at them and think, okay, there's a consistent pattern that I'm doing here. And sometimes I'll look back at the journal and go, you know what, you're not doing anything wrong. You're trading great. The market didn't work. It is what it is. And it's fine. Taking losses is just a part of the game. It's not necessarily you did anything wrong. And so the journal is really useful for that as well, just to reinforce the fact that, you know what, you're actually trading great. The market didn't work in your favor, but that's fine. There's nothing to do. Just keep trading. It'll work out in the series of trades that you take.
And what other information are you putting in there? Or what information are you putting in the journal?
So I will put my, what pair it is, the day I'm getting in, the time I'm getting in, what setup it is, whether it's a continuation bullet or if it's a maybe it's a bear. Bear. Yeah. So it's a buy or it's a sell. If it's a bullet or it's called a bomb. Which is like, a bear flag or a bull flag, depending on momentum. I'll then put in a confluence of the reasons why I got in. It's a clean 2-candle break above the high from existing momentum, with an immediate retrace to the previous high with a bullish close, which is what I put for that, And so I then have a consistent record and then I'll say, okay, was it a high probability? Was it valid? Or was it low valid, or was it invalid? Is this a FOMO trade where you actually broke your rules, you wanted to get in, and you got your ass handed to you because of that? Because that's useful to go back to and go, oh yeah, I've seen this before. Last time this happened, I wanted to be in it. I got in it because I had FOMO, and I got told off by the market too. And then I'll put my results in it, how many pips I made, which will then generate what the risk and the reward was, and then I'll also look at what was the drawdown that I was in before price went in my favor. And the reason I do that, so an example of this is, all right, I was actually only in 0.6 pips of drawdown out of my 15 pip profit target, out of my 15 pip stop loss on this trade. And so if I can build up enough data over the year, I can say, all right, my stop loss, I'm always putting at 15 pips or 15.5 pips. But the trades that I'm winning, it's never hitting over 10. So I actually have an allowance really to bring my stop down to 13 or 12 if I wanted to. And then if I did that, well, it would have a profit, an increase in profit over the year, uncompounded of X, right? Which, okay, yeah, that's worth it. Or it might be, this stop loss actually really works great for me. Personality-wise, it just fills me with more confidence. I like to have a bit more of a buffer, and I only would have made maybe like another 5% over the year if I'd shortened it down. And so, you know what? I don't feel like it's worth it. I'm happy where I am. But regardless, the information's useful.
I'm so proud to hear that someone is doing what he should be doing when he is trading, journaling. He's honest to yourself. He's always trying to progress. Really nice to hear. Thank you so much for this. And I cannot wait to results. I cannot wait to hear your results in the client matrix. Can you show me?
Sure. Okay. So this is the metrics from the account. Very nice equity curve, if I do say so myself. So even here, right? I actually remember that. Obviously, it wasn't that long ago, so of course I remember it. But I remember clearly, I started out quite poorly. Not that I was trading poorly, but I'd missed a couple trades. And for me, one thing that I consistently battle with, it actually happened to me this week, where if I miss a trade because I overslept or something happens, that really pisses me off, right? Because I make myself available so religiously to be available to take positions. I'm so organized. I'm so anal about my laptop set up. Everything's charged. Screens are on. Sound's on. I don't care if it affects my sleep. I'll wake up every hour if I have to get into the position that's there. Then it really, really pisses me off if I miss it, right? And I remember what happened. It was right at the start of that month, and I'd woken up. So I set my alarm every morning for 6:57 in the morning because it gives me 3 minutes to then see if there's going to be a position open on the 7 a.m. candle that I can get into, right? And so like I'll set my alarm for 6:57 and 7:57, right? Because if there's nothing, I'll try and grab another hour of sleep. Because I know that I have affected sleep throughout the night, I'll try and get a little bit more in the morning if I can. So I'm meticulous about that. And I remember that morning I woke up at 5:57 and I woke up at 7:57. And for some reason, it wasn't that I missed the alarm. It's that I can't quite remember what happened, but I stuffed up and I wasn't there for the 6:57 and the entry candle was on the 7 a.m. candle and I missed it by an hour. And it was a great trade. It was like a 3.5% position. And so that sent me into like this like revenge spiral where I like tried to get into other trades, which was really irritating. And that's why I kind of had this drawdown of like these 4 trades that went against me. They could have gone against me anyway, but if I had the profitable positions sandwiched in between them, then the equity curve would have been different.
And why are you mad at yourself when you cannot be up all day?
Well, I can't be up all day, but I had gone against the routine, right? The routine is, you're up at these points, and I think the night before I may have had like a glass of wine. I don't drink, right? But I had a glass of wine or something, and that like one glass of wine would just literally kill me because I never drink, so my body's just not used to it anymore. Okay. And so I was really annoyed that I'd done that, and then I wasn't up. I missed the position, and it just pissed me off a lot.
I get it.
Because the things that I can control, I want to control. Right in the market, I can't control anything, right? But if there's something I can control, I want to control it.
Yep.
So that's what frustrated me about it. And then I had to kind of get over it. I then just went back to the process. I used to play tennis when I was younger at a fairly good level. And I played for like 25 years, and I've gone deep into tennis psychology, which is super similar to trading psychology because it's a one-man sport. It's just you out there. It's you versus you. No one else there on the court with you. And so with trading, it's very similar. Right? No one's there with you. You're taking all the decisions are down to you. Right, everything's there. You're set up, whether it's a short forehand, whatever it is, or if it's a bullet setup, continuation, whatever it might be. Is there. And like in tennis, it's all about being process driven, right? Because you can't control how hard the guy's serve's going to be or where he's going to serve it. The only thing you can control is your reaction to it. And so if you just go down to point by point, game by game, set by set, match by match, and just control the things you can control, it kind of helps to just alleviate the pressure of everything else going on around you. And so once I made those mistakes, I kind of went back to, okay, just be process driven. Let's just go back to how you trade. If the setup's there, you take it. If the setup's not there, you don't take it. Fuck the revenge. Fuck the FOMO. Fuck all the other shit you don't need. Just be disciplined enough to be better. Right? And so anyway, I did that. And things worked out pretty nicely. Obviously, I didn't make any of these losses there. And And this is the statistics. Yeah.
Before we go into that, I would like to ask some tennis question. How hard do you think it is to stay in the top, stay on the top in the tennis?
Oh,
do you think it is the same as in trading?
Well, I mean, fortunately in trading, you don't have to be as physically fit, right? As you do to be like Nadal or Djokovic or Federer or whatever.
You have to be mentally fit, right?
Yeah, I mean, the mental requirement for trading is just so enormous. Like, it's really, really enormous. You know, the discipline required to be a really good trader. And this is not me thinking that I'm a phenomenal trader. I want to become a phenomenal trader. And I've met people that I'm like, oh my God, you are just insanely good. But one thing I back myself is my discipline, right? I used to be morbidly obese when I was younger. I've had plastic surgery to remove my loose skin from being super overweight. So like I went on this long journey of being like hugely obese when I was younger and learning how to change my mindset, my relationship with food. And like, I personally think a weight loss journey is like the biggest you versus you experience that a person can have, right? Because like if someone needs money, you can give them money and they're set, right? They're back to normal, they're fine, they can crack on, right? Maybe their mindset's not there to handle the money, but at least they're there. Whereas in weight loss, right, no one can do it for you. I can tell you you need to go walk, run, eat right, work out in the gym, do these certain things. But if you don't do it, there's no result that's going to happen. It is just you versus you. And so that's sort of where I back myself when it comes to trading, because I managed to do that. And I've managed to keep the weight off and be lower and get leaner and all that kind of stuff and really stick to it religiously. I know that I have the discipline to be able to trade. And when it comes to tennis, that discipline is so, so important as well to stay in the top. You know, the way that these guys are so disciplined, they have so much perseverance and they're so dedicated to their craft and they really love it. You know, the guys at the top, I've got a couple of friends that are pro players that have been in the top 100 and I know them very well and I know what they're like. You know, they are phenomenal athletes. But then the guys that are right in the top 10, they do everything, but just on a heightened level. You know, nothing gets missed. Everything's meticulous. You know, they're really, really on the ball about everything. And I think to be exceptional in any industry, in any area, you just have to be meticulous about the way that you perform your tasks day in, day out. And it is boring and it's not a sexy answer, but it's just the reality is you have to really, really hone your skills and be hyper self-aware of when you're doing things well and when you need to improve on the things that you're doing.
Man, I just got goosebumps. So it is 100% true what I was saying. Exactly. It is same as in other industry, right? It is.
Yeah.
It's like sport. It's anything. Like if you want to be successful in something, you must be.
You just got to, you got to stick to it. It's just not going to happen otherwise because there's so many brilliant people out there, right? Yep. And the competition's so high. I mean, there's no mystery as to like, you know, why most traders fail. Like 90% of traders lose 90% of the money in the first 90 days, right? Because they don't have good risk management. They don't have an edge. They don't have the discipline required to trade. They don't know what it feels like to lose and then go into the next trade. I was hearing this thing from Mark Douglas last night, actually. He was brilliant. He was like, to think in probabilities, which you need to be a trader, is like, you need to be able to lose without thinking you're a loser and to be able to be wrong without thinking that there's anything wrong with you. And I thought that was just such a crystallizing, clear, concise sentence that really explained the mental requirement to be a trader. And even in other areas, right? Even with tennis, if you lose a match, it's not about you losing the match. Maybe the guy played phenomenal, right? If a guy's hitting the cover off the ball and he's smacking winners left, right, and center, there's aces flying past you. There's nothing to do, right? The guy played phenomenal, you know, so you can't walk out there going, I'm so shit. This is horrendous. I can't believe that happened. It just is what it is. And so sometimes being able to identify that, but still go back to the drawing board, back to the practice court, back to the back testing and go, all right, that all occurred. Regardless, I still need to be better. These are the areas that I know I can improve on. And then, you know, being self-aware enough to go, all right, I need to get better at that. Like I still have loads of things that I need to get better at. Accepting loss, I could be better at that. I could do it faster. I could not be attached to the outcome more, right? And as you scale up with more money, you get more attached to the outcome because you're like, shit, I've never earned that much this month. But if you want to get to the point where you're trading $100 million account, which I would like to get to that point, then I need to get comfortable with earning, you know, 30K a month on a 450K account, right? That needs to become comfortable and I need to feel worthy of that. So I need to work on that because for the last 29 years, that hasn't been the norm, right? But if I want it to be the norm over the next 10 years, I need to get comfortable with these things. And so I need to work on that and accept that those things are going to happen if I'm disciplined and if I'm meticulous and if I can stick to it.
And how would you define the best trader? Because in the tennis, it's like we got ranking, right? It is like top 10. We know those guys. It's just ranking, just points. But it is kind of hard question. What is the best trader, right? How could you define him?
Well, I think anyone would define it differently depending on what they hold more merit to, right? Some people say, well, the best trader is the guy that makes the most amount of profit. Others would say the best trader is the one that makes the most amount of profit without adhering too much risk, right? Or has the least amount of drawdowns and a good profit factor. So, you know, for me, I would say the best trader is the guy that's really the most consistent. You know, if you have a huge 20% month, well, that's phenomenal, right? But if the next month you're like, you know, -5, -4, -3, then it's not particularly consistent. And I don't know how long term that's going to last. I think consistency is a huge factor because to be able to be at the top for so long and generate consistency really shows that over the period of time, you've managed to stay really level-headed, right? And really focus on what you want to do. Where if you're kind of having like huge ups and downs, I don't think it's just sustainable for long-term success. You know, like if you look at Federer and Djokovic and Nadal, these guys have dominated the tennis world for so long because they've been so consistent. And I think that's far more impressive than, you know, someone coming through winning one Grand Slam and then we never hear of them again. Right? It's a pretty extreme example because those guys are that good. But I think in the trading world, it's similar, right? You have boomers and busters. A guy that comes in makes, you know, a couple million one year, and then he like blows his account. You never hear him again. It's not that great when you've got guys that have run hedge funds for 30 years and have had, you know, an annualized return of 20% every single year over the last 30 years, with very, very small risk per position criteria. It's very impressive, right? They may not be making 200% a year and doing these huge crypto returns, but they can wake up every morning and rely on the fact that their skills are going to allow them to make consistent profit in a really inconsistent environment. And that is nails.
Oh my, let's get back from the tennis to your statistics.
Sure.
All right. So RR 4.29 and the win rate 37. Cool. So it has to work in the long run, right? Even with a win rate 25.
Exactly. You're right. So that's sort of those win rates. Like, I actually don't use the metrics. When, you know, we spoke about doing the interview and you mentioned it, that was actually one of the first time I'd gone in and had a look at it. Because I'd used my own journal stuff, I had never really looked at it. And also, I kind of spent the weekend looking at different softwares and stuff that will allow me to do more automated journaling and spit out, you know, gain to pain ratios and, you know, Sharpe ratios and profit factors and different stuff like that. And I also then had the feeling like I don't like to get too bogged down into the numbers, right? If I'm making profit, that's a pretty good indicator. Or if I'm making percentage, right? I don't like to think in absolute sum values. I prefer to think in percentages because that's a far more scalable mindset than going, I made 30 grand that month. It's like, well, I did 13.8% or 13.3%. For me, that's far more impressive because I'm like, all right, if I had $1 million account, well, then that 13.3% is a far better reflection than the 33K, right? So, you know, I like to think about my performance in percentage. So throughout the month, I don't like to know what maybe the profit factor is or the win rate is and stuff like that, because it can, if it's really good, because you've taken some genius trades early, when I say genius trades, some really great trades early on, you can sometimes get into like this protection mode, right? Where you're like, I don't want to stuff up the stats because those stats look great. And anyone looking at those stats would think this guy's on it. And so I would prefer to be a little bit oblivious, trade the strategy as the setups appear, and not think much else about it. And then at the end of the month, go, oh, okay, yeah, look, the win rate was, 40% this month. Yeah, that is pretty good. It's normally around 35 or it's normally around 30 and the profit factor was 2.58. That is pretty solid. But if I knew that earlier in the month, perhaps I would be a little bit more protective and then I wouldn't take a position because I get a little bit of fear. I don't want to take that trade. Right? These are all trading errors, right? I'm not necessarily saying I wouldn't take the trade. I probably still would, but I don't like that I would maybe have that thought. And they're things that I need to work on. And hopefully over the next 3 years, if we speak again in 3 years' time, I don't even have that thought at all. I could look at any of this and it doesn't matter because I've built more confidence and subconscious confidence over time. So, I don't really look at these much. I think they're interesting, but I much prefer to focus on identifying my edge in the market in the current moment. If it's there, take the trade. If it's not, do nothing.
Yeah, but
then whatever these are at the end of the month.
Yeah, but for example, you can identify some mistakes in your strategy. For example, if you would have risk to reward ratio 1 and win rate 40%, you know what to do, right? You have to increase at least one of them. So you need to develop your strategy to have a higher win rate, or at least open a bigger risk reward ratio, right? For example. Yeah,
that's true. I mean, there will be factors that will be interesting. I think after enough of a sample size has passed, right? Because you will have bad months, right? Sometimes it's going to happen. You're not going to have the most profitable months that you wanted to, that we all make mistakes. Or the market just won't potentially move in your edge's favor throughout that month. And so if you're always looking at these things, changing them every month because, this wasn't quite right, that wasn't quite right, you need enough of a sample size to go, you know what? I'm going to take losses. I'm going to take wins. It's fine. And so if I'm reviewing this sort of stuff intra-month, I think it's too detailed. I don't need to know that stuff at that time. And even a 1 month period probably isn't enough of a sample size. Like 16 trades over a period of the entire year is not really much, right? So I would rather look at my performance over a quarter and say, okay, now that the quarter's done, all right, now let's go and see if we can find patterns of things that I've potentially stuffed up on and made errors here, there. And okay, all right, yeah, there was that thing that if I'd not done that, I would have saved myself maybe 4%, and that 4% maybe wouldn't have affected my mindset elsewhere. So I think it is important to look at it. I just don't want to obsess over it and go, or if I have it really good, I don't want to protect it too much because I want the freedom to just take the position when it's there.
Well, for me to see 16 trades, it just means that, well, in 30 days, well, this guy, he's not overtrading. He is really thinking about when he's going to open the position. Probably, right? But I do think that's a small number. I think it's a really good number. 16 trades.
Yeah, I'm happy. I mean, 16 for me, I'm really happy with that. I know in my previous strategy, I was doing like 40 a month, and it was too much. That's overtrading a lot. I will take around 2-3 positions a week. That's not because I want to stick to 2 to 3 positions a week. That's just because my setups, the good ones that I see, and my now ability to identify setups that aren't very high probability, right? Or that I've seen in the past and go, this is another one of those that's more likely to lose because I've got the data now. So I can trim it down and go, okay, these are the setups that sort of happen throughout the week. So I think, for me, normally my number of trades per month is around, 14 to 20 on the higher end, sometimes 12 on the lower end. Yeah.
Okay. And the last thing I would like to know, what did you trade? What symbols?
It's going to be the same 4 that I always trade. Aussie yen, Aussie dollar.
You have a below a really nice chart. It's a symbol analysis. And yes. Cool. Symbol.
Sorry, yeah.
That is right. So the Aussie one, right? You mostly focus.
Aussie. Boom. So this is something that I've actually noticed, not just in this month, but over the year. I've been a lot more profitable on Aussie yen and Aussie dollar, especially towards the middle half of this year. I don't necessarily know why. The positions I took on euro yen and euro dollar at the start of the year are the same variables that I still enter positions on now. So because I'm not a fundamental trader, I don't look into the economic reasons of why the euro is going to be fluctuating and moving. Right? If my setup's there, I'm a screen-based technical trader. I stick to what works for me. I look at economic things, but mainly from it's more of a mental masturbation perspective. I'm interested in it, so I want to know about it, but it doesn't impact my actual trading. And I think there are some traders out there that always want to go and hunt for information because it's going to give them that little bit more. They might be able to remove a loss here, there, and maybe a little bit more. But I think over the series, right, it's not as important as perhaps people think. So,
well, if you have
I'm not surprised to see that.
If you have noted that you are mostly profitable in the Aussie, why are you not trading only them?
It's a good question. I mean, look, this is something that at the end of the year, I would probably review and go, all right, if I took out euro yen and euro dollar, right, what would my year look like? And versus if I didn't, and it might very well be something that I do. But I also know on my back testing in 2020 and 2019, euro yen and euro dollar were hugely profitable and successful. So, you know, and this is just 1 month, right? There are other months that I've had very profitable euro yen and euro dollar months as well. So it's just not a big enough sample size for me to say, oh, I'm going to scrap that. And I think if you focus too much on a monthly time frame, you will make decisions on a data that is not robust enough.
Cool. All right. Thank you so much for this trading analysis. And let's go for our next part, Joshua. All right. It seems, Joshua, that you have a lot of experience. So do you have some guidance to our traders?
I mean, I've got a couple of friends that I speak to regularly that are trying to pass FTMO. And, you know, the things that I say to them, because of the way that I've kind of had to think about it, is first and foremost, like I just say to them, don't put it on a pedestal. You know, don't focus on it so much that every trade becomes like, oh my God, it has to be a winner, Like if you don't pass the challenge 1 month, it's like, it's not the end of the world. It really isn't. You know, if you finish positive, you've got another month to try again. And one thing I will say is that within the 22 times that I tried to pass these challenges, you know, with a mixture of 100K account, 200K accounts, it really made me comfortable with trading 100K and a 200K account. So by the time that I actually got there, the numbers were so normal to me that I didn't feel like, oh my God, I'm trading a 200K account, because I'd done it for so many months. I had so many accounts. I've tried it so many times. And so there's actually a benefit in it taking longer, because you just become a lot more normalized to the numbers. Because before that, I was trading only like a $20,000 account, right? So I was going to 5 to 10 times what I was trading. So it was a big jump. And so doing it that many times made me really more comfortable with those numbers and allowed me to scale faster. And now I've been funded in other prop firms, and, you know, it's getting much bigger. And so I could become more comfortable with it, because probably the amount of times that I tried to pass the challenge. So it isn't about trying to do it instantly. I know your ego wants to walk around and be like, nailed it, you know, like, yeah, I did it first go, don't worry about it. You know, like, it's nice, great. And I was pumped when I passed the verification on the most recent one in like 2 days. It's nice, but it's not the most important thing. And you will put unjust amount of pressure on yourself that isn't necessary. Because if it takes you a year to pass it, and you then are making 5% a month or 3% a month or 2% a month or whatever it is a month, that's phenomenal income, right? For an individual who's started to learn trading, who's now making that amount of income, that's great. And like, if someone said to you a year ago, oh, you know, how would you feel if you're making 5K a month, 6K a month in a year's time? You'd sign for it, right? Working at home, taking 4, 5, 6 trades a week or whatever it is, right? You'd sign for it on the dotted line. You'd go, that's amazing, right? And then you can build from there. So I think people get really dismayed at the fact that they're not passing it. They feel like they've failed it, right? I failed another challenge. And if you do fail the challenge, right, meaning that you didn't finish in positive, and let's say you're doing a 100K account, it's only 500 quid, right? It's not, yeah, it's annoying, right? And yes, you'll hand over the next 500 through gritted teeth, and you'll be like, bastards, but it's not the end of the world. And the upside is significant. You know, from what I spent on FTMO challenges and what I'm making this month, for example, is way more than what I put out, right? So I'm far ahead in the long run on it. So as frustrating as it is, it's not about trying to nail it the first go. I took me 22 attempts, right? And I did 4 verifications, and I failed so many times, but now I'm there. So for anyone, it just keep cracking on, right? Refine it, be smart about it, be cognitive. Think about, if you are making mistakes, identify your mistakes, improve on your mistakes, get better, try again, and just rinse and repeat that process until you pass it. And then once you pass it, think of it in this way. you're just now into the tournament, right? I thought about tennis waves, right? You're qualifying, you're trying to qualify, you keep losing in qualifying, you can't quite get in. You finally pass. It's not like you won the tournament. You just got into the first round. You're now in main draw, right? Now it starts, right? So it's not about passing it is not the big thing. Once you pass it, now you can start. And then it's about just chill, take your time. It's not a sprint. Be consistent, right? That is way more impressive than this like Hail Mary trading where you're like walking around being like, yeah, I made 20% this month, or like, yeah, I doubled the account, whatever. You know, it's great if it happens, but it shouldn't be. I don't think it should be the goal.
Amazing. I couldn't say it better, man. Great to hear. And what would you say about FTMO to others?
I would say that it is hard. You know, I think I understand why you guys are the way you are. Like you said earlier, it has to be the same environment for everyone, right? It has to be fair. It is very hard, right? And I think, you know, what you're trying to do with the 10% per month is, like I said earlier, is an annualized return of 120% per year uncompounded. It is tough. So, you know, don't go into the challenge thinking that it's really easy, because it isn't really easy, right? And it will take time. And if other people are passing it around you, then that's fine. Great for them. What I will say is it's been a phenomenal opportunity though. You know, I only learned about FTMO in March last year. And what it's allowed me now to do for my personal income, it's allowed me to then have the confidence to pass other challenges, other prop firms. I've been picked up by this hedge fund. You know, like the trajectory that I'm now on, for me, I feel is like this. And I'm not sure that I would have been able to have that had it not been for FTMO. That's not to say that my experience has not been difficult. It has. It's been very challenging. But I'm happy that I was disciplined and persevered through it. And so all in all, I think it's good. But just go into it with eyes open, right? It's tough. It is tough. They are a business, right? They want to make money, and you are probably a number, but that's okay, because once you have multiple accounts, they're a number to you, and you guys can work together. The better you trade, the more you'll make. They will pay it out. You know, I've always been paid on time. I've had no issue with that. So eyes open, go into it. It's tough, but it's good.
Well, Joshua, thanks so much for your honesty and that you are opening yourself to us that much. It seems like
you're welcome.
It seems like your experience bursting around, and I'm just catching it somewhere because you are a really excellent trader. You brought up some really interesting thoughts. For example, of the consistency. I cannot agree more. Consistency is the most important part of trading. I would probably only add that the discipline and motivation is also a really good part of trading and prospering trading. And again, I'm honored to meeting you, and I have one special advice for you. In trading, the impossible happens just a few times a year. Do you have any last words?
No, I think I've said a lot. I'm good, but thank you for the opportunity.
And that's FTMO.